Let's get more on this now with Tim Waterer in Sydney. He's Chief Market Analyst at KCM Trade. It's good to have you back on the programme with us, Tim. Now, Chinese traders had driven a speculative surge in precious metals, but we're now seeing a reversal of that. What's triggered the sell-off?
Nice to be with you again. Yes, it's really a confluence of factors now. You alluded to one of them, thinner trading conditions owing to a couple of holidays around the globe this week. Chinese New Year, that's obviously drying up some liquidity and amplifying some of the downside moves. Now, we also have the US-Iran talks, so I think there is some positioning for some potential progress there on that front, and that's causing gold to decline. And the other is we're still not sure what sort of Fed chairman will get, a hawkish or a dovish one. So the jury's still a bit out on Kevin Warsh and how he will go as the Fed chairman, and whether we're likely to see a more dovish Federal Reserve or a more hawkish one compared to the current tenure of Jerome Powell at the helm.
Right, and we're also seeing a recovery in the yen. Have investors shrugged off that weak data from the start of the week?
I think so. I think traders, what they're looking at right now is that weaker data, that really opens the door to more fiscal stimulus, which in itself, that can lead to greater inflation, which in turn can cause the Bank of Japan to start raising rates again. Now, that may not happen for several months yet, but we have seen Japanese government bond yields move higher, and that is drawing the yen higher with it.
And with minutes from the Federal Reserve's last meeting and advanced US GDP figures due later in the week, how pivotal are these releases for shaping the next move in markets?
Yes, along with corporate earnings, the market will be looking at these macroeconomic releases. I would also add the US core PCE data into the mix as well. That's the one the Fed keeps a very close eye on in terms of inflation. So yes, as I mentioned, the market's really trying to gauge right now when that next rate cut from the Federal Reserve may arrive. It still looks like it may not be until mid-year, but certainly any downside surprises in the data in the meantime, that could bring forward the timeline. So I think traders will be really looking at the data releases this week to try and anticipate when the next move from the Federal Reserve may happen.
And going back to gold and silver, do you expect to see those continue to rise throughout this year, or is that safe haven bet over for now?
I do expect gold and silver to build on gains throughout the year, but I think it will take a return to fundamentals. So I think the market is still a little bit shy based on the volatility, extreme volatility we saw at the end of January, start of February, when we saw moves of 10% in a day for the gold price. So I think traders are not going as gung-ho into gold as they did before the end of January. So a little bit more cautious now, but I do expect gold to have more upside from here for the rest of the year.
Tim Waterer in Sydney, thank you very much as always.